We're bringing discipline into trading. Okay, if we flip a coin, decide whether to buy or sell a stock, we've got a 50-50 chance. Sometimes we just get it wrong.
Yes.
So we're going to look at, this morning, bringing discipline into trading, Pega. We're going to look at what is a stop loss and when to use them, what a risk to reward ratio is, and then also how do we put on a trailing stop loss. Let's start with what's a stop loss. Number one position that's been our problem has, of course, been Delta Airlines, hasn't it?
Yes, traditionally.
So just as a reminder of the positions we've set up over the last 4 or 5 weeks that we've been looking at this. EasyJet, wonderful. But the other side of the pair trade on EasyJet, what was it?
It was Delta.
That's right. So let's have a look at Delta. Currently trading $63.39, so $63.39. And we can see on the graph, it's just literally gone up since we shorted it, hasn't it?
Yes.
Now, if we have a good look at this chart, it struggled at that 65 level. And there wasn't enough momentum in the stock to take it from 51 through 65. What do you think that could mean?
That's the sort of peak of where it's going to get to.
And even digging deeper into that, what does it mean that's happened when the stock got to 65? It could be one of two things.
I wonder if people were using like the PE ratios that we saw last time, and sort of looked and thought that actually, the price to earnings don't match anymore. So I think maybe that could have happened. Maybe people sold.
So all the stock price is where the marriage of buyers and sellers. So if somebody's really eager to buy, then they'll keep on taking that price level higher and higher. So one of two things has happened. The buyer has got exhausted, or a new seller has entered the market at that level.
So somebody is saying, actually, for 65, I'm willing to sell. So I was going to hold it, but now at this price, that's good enough for me.
So at that 65 level, we can see that a new seller entered the market and soaked up all the demand, maybe all the demand that was left. However, if the buyers get aggressive again and they take it higher than this, then we might see it go even higher, because that means that seller has been finished.
Has maybe sold all of their shares.
Maybe sold all their shares.
Yeah.
So we can put a stop loss just above where the top was. And that top was, unlucky for us, 666. So would you like to choose where we put the stop loss on the stock?
And so that means that if we get to 666, then we can exit this.
That it would automatically close your position for you.
Okay,
right.
So then I wouldn't lose any more money on Delta.
You wouldn't lose any more money, that's right.
Okay, let's do it.
Right, so the previous high was 6661. So
Okay.
should we go slightly above that?
Okay.
How much leeway would you like to give yourself?
We go 6663.
Oh, I think we give yourself a little bit more than that.
Okay.
Because you're only £1 a point, remember.
Okay, so then should we go straight 6666, or is that still too close?
I'd even give you 72.
Oh wow.
about that?
Oh, okay. Okay.
$66.72. Right,
And that's really easy. So you just type it in right there.
you just type it in right there.
Okay.
And then hit enter, and that is your stop loss.
Okay.
Now, Kingfisher. Let's do the same, shall we? So Kingfisher's had a bad morning, and we've got that down here. So you can see we went long at 314, and now it's 257.
I know.
So it traded as low as 251 this morning. Should we operate a similar?
Yeah, so if we go a little bit further down, sort of in the 245 region, something
Okay.
like that.
I like that. Right, so we're giving that a stop loss of, add stop, 245, and enter. We're bringing discipline into trading, and it just adds to that portfolio management, right? So we've gone from choosing, and you'll see what are the two stocks that have hurt us the most. When did you choose those?
Those were in the early days. That was when we first started. And actually, luckily, we've pushed through. I think I maybe would have originally gotten scared and stopped, but this has been a good exercise to push through and keep going and get better and better.
And you certainly are, because the positions that you're taking now are more based on, well, you started to look at valuation.
Yes.
And you've started to look at what the professionals are saying, the research analysts, because a reminder that we looked at bringing the stock screener into things. The stock screener, a great tool on IG. This is one of my favorite things, that you can literally go in, you can look at the price target upside, you can select what you'd want there.
Yes.
Dividend yields, what sector, analyst consensus. Now I built one for you, which was all the real top criteria.
Okay.
And what's the best of the best in the UK and US. And then I've ranked it by market cap. And this gives you some of the idea there. So yeah, Tesco's is in there, Aviva's in there. But we looked at that last week, so that's a reminder. That's how you've chosen a few positions lately. This morning, I would like to look at some other examples.
Okay.
Because we know what happened in the US a couple of weeks ago. So perhaps, the US story might have looked fully played out somewhat at the moment. So I want to look elsewhere in the world, okay? Places that have got a good or longer term story.
Okay.
So we've started looking at the BRICS, ex-Russia.
Okay.
And we're going to have a look at emerging markets this morning. Now, we've been on PE ratios before, haven't we?
Yes, we have.
And there in the left-hand column, I've written out for you what the PE ratios of those companies are, but also what the GDP growth is. So you can see one is a playoff against the other. For the huge growth engine that India has, you have to pay more for that country, stock market.
I see that, yes.
And does anything else jump out to you, Pega?
So China jumps out to me because it has the similar PE ratio to Brazil, 11 times, but actually the GDP is growing twice as fast as Brazil's, in the low fours rather than the low twos. So that strikes me as something that might be a good investment as well.
And then right down at the bottom there, I have put in the US S&P 500 as a
baseline. Yes.
To compare it to.
Yeah, and you see that the US has the really high PE ratio compared to sort of a similar GDP percentage. It's almost double that of Brazil for, quite similar, even a little bit lower in terms of GDP growth. Excellent.
So it sounds like China might be the one that kind of sticks out to you there. So I decided to build you a little spreadsheet that looks at all the emerging markets. And I've taken the iShares MSCI ETFs. Because, of course, these ETFs, these are a grouping of multiple stocks. I mean, there'll be 10, 20, 40 in there. Yeah. So we take out that single stock risk of delta. We take away the chances of a kingfisher profit warning. And instead, we look at the country as a whole and the top stocks ranked in that country. So, yeah, you see China there, you see India, you see Brazil, South Africa. I've popped Mexico in there as well. And then Saudi Arabia, because Saudi Arabia has been particularly interesting recently as well because of, all the the growth there and the sort of development of the stock market. But it was China really that caught your eye, wasn't it?
Based on the numbers that we just saw, China seemed like, now that we're being more disciplined and really focusing on the story the numbers tell us, China seemed like a good option. And I see as well, if you compare the price to India, that's reflected in that slightly lower price. Is that right? That's
yeah, sort of spot on.
Yeah.
Excellent. Right, so let's have a look at getting you a trade of the China ETF. Okay. Now, the spread is a little bit wide, so we could look at an alternative of buying the futures of the A50. The Chinese market is the China A50.
Okay.
Right, so we've got futures on that on the platform. This spread is a little bit wide here until the US opens this afternoon.
I see.
But what we might do is just hold off and put it on this afternoon.
Okay.
But in the meantime, we're going to set up what is a risk and reward ratio for you.
Okay.
Okay. So you can see here, if we bought at 432, do you see these lines that are on the price here?
Yes.
So you're buying there, so we can simply move the limit up, right? And let's say we're looking for a profit of, what's that? That would be £500. If you set an equal loss and profit target, let's work off the assumption that you've got a 50-50 chance of being right or wrong.
Okay.
Okay, because everybody should have that.
Yes.
Okay, if we flip a coin, decide whether to buy or sell a stock, we've got a 50-50 chance. So, you putting your hard work and research and analytics into it, we hope to have a better than 50-50 chance. However, if you set your take profit and your stop limit at an equal distance, then again, it's kind of 50-50.
Yes.
So that means you'd have a 50-50 chance of being right, and you'd have a 50-50 chance of making the same amount of profit as the same amount of loss. Not great odds, are they?
No. And there's also, loss aversion, right? Which is that we miss the money we lose more than we love the money we make.
That's right, the actual psychology, which is completely true. So let's improve those odds for you.
Okay.
As we move that down, let's put a 250 stop there. So that's 21 points away. Our profit is 42 points away. But what I'd really like to show is this bit here. Risk reward ratio 1 to 2.
Okay.
Oh, so risk reward ratio 1 to 2. That means we've set the limit at 474 to take profit, which would be a £500 gain. But we've set the stop at 410, which means we'd only lose 250. So your risk is 250, your potential reward is 500. Even if you got an equal amount of those right and wrong, then at least you're making 2 times the profit as you do the loss.
Yes. And just by setting it up this way with the limits and the stop, I'm able to sort of create that portfolio that's working a little bit harder for me. Is that right?
That's absolutely right.
Cool.
So let's look at putting that on. So you're going to be long China with a stop loss and a take profit target. But what would you like to have as your hedge? Because we've only put pair trades on so far.
Okay, so I think India is just growing so fast. I don't want to bet against them, right? And Brazil as well. I guess from the numbers, it's a similar price. But I think that GDP growth is probably the most important number to me. And I think slowdown will impact most of all. So I'm going to focus.
You don't have to choose an emerging market. You can choose anything you like.
Okay, well, I'll stick to the emerging markets. So I would go short South Africa.
South Africa, right. So we're going to put in a short on South Africa. We'll set that up for you, and that will go into your portfolio. So a reminder, what have we done today?
So we've learned about stop losses, and we've learned about sort of diversifying our portfolio outside of traditional exchanges, let's say, and thought about other countries. And we've looked at how GDP growth impacts the PE ratios in the respective countries.
That's exactly right. So you don't just have to play single stocks, because we've seen the risk of playing single stocks, right? This morning, this very morning. And we've seen the risks of choosing companies just because we might personally have spent money in there. A much more sound long-term strategy is to either focus on valuations, to know how expensive the stock is, to know those profit targets of research analysts, or to look at a more diversified portfolio with ETFs.
Yes.
By regions. We can even do it by sector. So if you did want to stay in the US, you can see there, we break it down by industry. So consumer discretionary.
Yes.
Will healthcare suffer under Trump? Is he going to bring the profit margins of healthcare providers in? That's a lot more diversified, and then hopefully we wouldn't see those horrible red numbers on the screen that scare people off. And we're starting to show how we bring that number down, and that is what we want to do from this segment. We really want to bring that number down and help you guys at home to become more profitable over time. And Pega, you're doing a lot to help everybody.
Perfect. And I've learned a lot on the way as well. So yes, I'll go put my trades on.
Wonderful. And the excitement only continues from here, because now we're going to start looking at options from next week onwards.
Looking forward to it.